Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I will be your host. So today, we're going to have Stefan von Imhof with us today. How you doing, Stefan?
I'm doing great. How are you?
Good, good. So Stefan, maybe we can talk a little bit about your background before we get going here.
That sounds great. Sure. So I have spent about 15 years in technology. I was a product manager. Worked at a couple companies. One was Citrix, which was kind of like Zoom before Zoom was cool. I worked at a company called Lynda.com, which was bought by LinkedIn. I worked at a data company called HG Insights. And then most recently, before starting Alts, I was the head of product at a company called Flippa.com, which is a marketplace for buying and selling websites, micro SaaS sites, e-commerce sites, basically micro private equity. And it was at my time at Flippa when I really started to get into this idea of alternative investments. And that's when I started Alts.
Cool. So before you get into that, because obviously Flippa is a little bit of an alt in of itself. So tell us about that, because I know a little bit about it, but what do they do?
Yeah, it's a great platform. Flippa was way ahead of its time, actually. It's definitely one of the original kind of active alternative investments, and that's kind of how we looked at it. So what Flippa does is it's a marketplace for buying and selling primarily what we call content sites, which are basically just websites that earn revenue through advertising and affiliate arrangements. And you can go on this platform and buy sites that are earning, $10, $20, $30,000 a month. And you can buy them for, the equivalent of, 3 to 5 years net profit, which is pretty darn good. And, it's funny because a lot of people don't really realize that this market even exists. But yeah, there's a whole ecosystem of people buying and selling sites. Content is one of them. E-commerce is another type of site. Micro SaaS is getting really big. We also did apps and domains and other kind of like digital assets, right? Newsletters, for example. But there's a whole robust ecosystem out there, and we always kind of thought of it as an alternative investment, and it's definitely a very active one as opposed to a passive one, but definitely it can be a very, very lucrative one as well. And that's kind of actually how I got started with alts, was writing about this space through the lens of website investing, and then kind of expanding beyond that.
Yeah, to me that's interesting. I dove down this rabbit hole a while ago because I have a few clients who do this, and found it interesting that you could get a website that's producing pretty consistent income, and you could purchase it, and you've got ready-made cash flow, right, ready to go on it.
Yeah, but it does come with risks, and that's a big part of the game, so to speak. And so what the risks are pretty obvious. Like it's you're not buying Microsoft here, right? Like you're buying websites that are maybe there's something wrong with them. Maybe they need a little bit of fixing. Maybe they just need a lot of TLC or maintenance. Maybe they do okay, but they could be improved. Perhaps they're fine now, but in the next Google update, Google's going to punish the site for some reason, and it's going to reduce the rankings in the search rankings, and that's going to affect the traffic and the affiliate revenue. So there's a lot to learn. The biggest thing that you have to do is you've got to protect yourself from everything from scams and fraud to making sure that you're buying a good quality site. And so one of the things I did there was I actually started Flippa's first due diligence program. And so what that program is basically an in-house due diligence service that we provided, where we would look at and analyze sites for buyers for a pretty reasonable fee. And it was kind of through that website analysis, that valuation analysis, that I really kind of started to extend that thinking into other asset classes, right? Like, if you know how to value a micro business, basically, you can value all sorts of other alternative investment opportunities. So that's kind of how I got my hook in there. That's how I got started with alts.
Nice. Yeah, it's interesting because I actually know a few friends of mine who have run really successful content sites, and then they sold them for big money a few years back,
Cool.
and then the sites just didn't continue on. It was kind of like, yeah, this person did everything they possibly could to squeeze out every nickel they could from the site, and they ran it well, and they had a great audience, and the people came in and were like,
Right.
this person's an idiot. I'm going to come in and change the world and double the revenue. And they didn't realize is this person was running a very well maintained, efficient site. You know, they did it right, and they came
Yeah.
in and they thought they were going to do it different, and they just totally, torpedoed it.
Yeah, you got to know what you're doing. You also you don't. It's kind of like real estate. Like you don't really make money when you sell. You make money when you buy, and so you want to make sure that you're um, you're not buying something that's been fully optimized. What you really want is you want to look for undervalued assets, right? You want to look for stuff that is truly a hidden gem, and it's out there, and it's it's tough to find sometimes, but you got to know what to look for. And then there's other people that know how to look too, right? And so you're fighting against a lot of smart buyers now, and even some institutional buyers, especially with e-commerce. There's a lot of institutional buyers with Thrasio and kind of the roll-up companies, right, that are scooping up the best e-com deals out there. But yeah, I mean, it definitely takes some education and some work for sure. But if you do things right, yeah, it can be. You can definitely get sites that just perform for years and years and years. I have sites that I don't even touch. I maybe go in once a month and update, like WordPress plugins and stuff like that. And they still, just before this call, I got an email. It was like, oh, the new payout for this other site I had was in. It's like, yeah, great. And the thing's still pumping out revenue. So, it can be pretty good.
Did you buy the sites or did you build them?
So I usually just tried to find something that was um, already built, but had something clearly, obviously fixable, wrong and fixable with it, right? Which makes it undervalued. So, like, for example, one of the biggest things you can do is when you go to a site, you got to be collecting people's email addresses. I can't tell you how many sites like don't collect email addresses. So all that traffic is lost forever. And if you're not, you know, collecting an email address, you have no idea like who's visiting, who's really interested. Sure, a lot of people aren't going to sign up, and a lot of people might see the email form and just leave and bounce, right? That's okay. At least you're getting the people that are interested in your niche to sign up. And once you have that, then you can start sending email newsletters. You can start monetizing those newsletters. You can monetize emails through affiliate links. Even having a few hundred people on a list is far better than letting that traffic go to waste. So there's other tips and stuff like that, like things that I look for in a site. And if I saw that it was clearly fixable, I would do some due diligence and then buy the site. Thing is, I don't really have time to do that as much anymore. Basically, it's also like potentially a conflict of interest because my firm we buy alternative investments, and so I shouldn't really be getting that game on a personal level. But yeah, I definitely have old sites that I bought years ago. They definitely don't do as well as they used to, but I mean, I put like very little time into them at this point. It's kind of like the first like month or two, you spend a lot of time getting things up to speed, and then once it's in a pretty good spot, you can kind of you can definitely step off the gas, and the car will keep moving for many many miles.
But I would imagine you probably still have stuff to do. You'd have to write the newsletters. You have to write the ad copy. I mean, do you have teams that do that, or how are you keeping the site running? Because I know there's a lot that goes into it, even for really well run sites. There's it's not like a set it and forget it kind of thing.
No, it's not set and forget it, but it's very outsourceable. There's a whole sub economy of content writers, of designers, developers. You look through Upwork, it's like one of the biggest categories: content development, content management. Um, SEO is probably the area that takes the most amount of time, and it's the toughest to outsource. There's a lot of keyword research, keeping up with Google changes. It's a never-ending, kind of
Yeah.
battle with Google, so to speak. But I mean, there's companies and folks that can do that. I think it's a kind of a relationships game. Like when you get into a good groove with folks you've been working with, they trust you, you trust them, and over time, it's definitely something that you can definitely take the gas pedal off for sure. I agree it's not set and forget it, but a lot of it's pretty outsourceable for sure.
Interesting. Yeah, I know that's the part, the content development, content management's the part that everyone complains about because it's really about having a voice, right? You can't just like crank out, generic stuff. Like it
Right.
has to kind
Well,
of,
you can. The thing is, you're not going to get as far with that, though, right?
yeah.
There's a lot of other companies cranking out that generic crap, and I mean, this is one of the things I love about my company now is that like we're the complete opposite of that. We don't outsource any content. I mean, it's all really like in-house. Like we put a lot of effort into our research and totally different game, but um yeah, it's definitely something to consider.
Nice. Well, cool. So you also mentioned SaaS companies, that's been the hot trend. And I mean, there's e-commerce has also been a big hot trend, especially for the roll-up companies. They're looking for these e-commerce sites, especially niche sites. And I've a few clients that do that. But to talk about that trend, because that's been a hot trend for over 10 years at least.
I think in the past few years is when it really started taking off, especially if you're talking about micro SaaS and micro SaaS companies. And I think one of the reasons is there's a company called Micro Acquire, which has really made a lot of waves and trying to normalize the buying and selling of SaaS companies and basically just startups in general. And they've raised a fair amount of money themselves. They've kind of lifted the tide for all boats, kind of in a way. Um, it's funny because like I look at Flippa and like Flippa was 10 years, actually no, we're looking at like 13 years old now. When Flippa first came out, I personally couldn't believe that there was a marketplace that existed like that. And so like the background is that I actually had an e-commerce site at the time, and I was looking to sell it. And I was just looking to sell it on eBay. I didn't know there was any sort of marketplace existed at all. I found Flippa. I was able to sell it on Flippa for way more than I thought I could, which was really, really good to see. It's funny because years later I would work at Flippa, and become the head of product there. But the point I'm trying to make is that Flippa was very ahead of its time, and now I think that the drumbeat's gotten pretty loud. And there's other companies, like I mentioned, MicroAcquire. There's actually a lot more than that. There's a whole bunch of companies that have entered the space now, and they've kind of brought the demand along with it, right? So I think COVID was another big, demand driver. I think during COVID, like we saw a lot of people that were working from home, obviously, and in their spare time or maybe in their primary time, they started online businesses, and so they're looking to either build or buy, and so the ecosystem kind of really benefited from that. And then now that was about 2-3 years ago, so now a lot of those sites are starting to come online as the original creators are looking to sell, right? And then there's a whole new buyers out there. So yeah, I think it's been around for a while, but it's only really in recent years that it's really started to get big, I think, in the eyes of kind of normal everyday consumers.
Yeah, no, that's good. So, you start up a new site, it's focused on alternatives. And obviously, what we're talking about may not seem obvious to people listening to the show as alternatives, but they're definitely this whole class of alternative investments that people don't even know exist, like, domain name URLs. We talked to a guy once. He's one of the larger, if not the largest, holder of domain name URLs, and looking at that as an asset class. There was a time 5 years ago, I think it was, huge demand for that, especially from Asia. There was just this push to just buy up as many URLs as they could. Is like it's a land grab basically, and I think that's kind of lightened up a little bit. But that's an alternative asset, right? It's something different that people don't think about. So, what are some other things that you've seen that are kind of interesting and outside the norm?
Oh yeah, there's so much stuff. I mean, so we this is kind of how I got started. Is I realized that alternative investing went far far beyond what even I was considering alternative. And so we started exploring all of these different markets. Domains is a great example. I think the land grab for domains was in the 90s. If you could, that's when all the .coms were available for like be able to hand register for $10, now, I mean, some of those are just, hundreds of thousands of dollars each. But domains is cooled a little. It's cooled off a little bit, but it's pretty, I think it's pretty evergreen. I mean, there's more and more websites each year. Everyone needs a domain. Everyone wants a .com. I think it's changing a little bit with like the crypto domains, and we can maybe get into that later. But for the most part, we haven't seen really like that much demand fall for domains at all. So it's still a great, well, domain to be in, so to speak. But yeah, it goes far beyond that. So I mean, we cover everything, right? Like we cover everything from what's happening in the collectible space with like sports cards and memorabilia, comic books. We look at farmland. We look at things like games and toys. We look at buying and selling islands. We look at NFTs are interesting because NFTs kind of just like fell in our lap like 2 years ago, year and a half ago, and that's a whole new market. Not my favorite market for sure. Very risky, very volatile, but fascinating for sure. We look at sneakers, peer-to-peer lending. I used to cover a lot of like buying and selling social media accounts, which is super underrated. Startups themselves, watches, wine, artwork. The list just goes on. I mean, basically anything can be a investable, fractionalizable, investable asset these days. And, it's created just dozens and dozens of entirely new markets that basically act pretty independent from each other. That's the fascinating thing, These are all independent markets with independent dynamics. And that's what we do. We try to understand these markets, try to make sense of them. We try to store the data, and we basically take everyone along for the ride. So, as we're learning about these markets, we write about them, we see the opportunities within them, and then we judge those opportunities. Very similar to how we would value, a cited flipper. Like, here's the pros, here's the cons, here's what we think the value should be, here's why, and here's our recommendation. And that's basically what we do.
Nice. Yeah, I will ask the obvious question here. I mean, you just mentioned a ton of alternatives that are unrelated to each other. And I know because we as a firm specialize in alternatives held in retirement accounts, that this is an ongoing issue. Is like, how do you become an expert in everything, right? Because you can't, right? There are certainly ways to do it, but how do you guys, if you're trying to do diligence on certain assets, how do you become an expert in everything if you're providing all of this on your site?
You can't. You absolutely can't do it yourself. So we partner with all sorts of experts from each of these markets, right? So I mean, there's definitely some markets that we know ourselves, we know really well. All things websites, domains, digital assets. I'm definitely, I wouldn't say I'm an expert. I'm always learning, but I know my way around for sure. My co-founder Wyatt definitely has an expertise in a few asset classes as well. He's mastered sports cards analysis. He's great with like rare books and comics, but at the same time, like, we reach the limits of what we can do and learn and achieve ourselves. So yeah, we partner with a team of analysts and researchers from around the world. In some asset classes, it's not too tough to find and even train. In others, it's there's like, you can count on two hands the number of people that are experts in these spaces, right? I look at like music rights, for example, and that's a very specialized skill set, if we're being frank.
Yep.
So there's probably 30, 40 people in the world who really know what they're talking about when it comes to music royalties and rights and publishing. But I've spoken to probably 6 or 7 of them, right? And so we're definitely inserting ourselves into the markets that we want to learn more about, and connecting with players who know their stuff. So like I said, with some markets it's easier than others, but you definitely can't do it yourself. You have to partner up with specialized folks.
Yeah, I mean, we've had a number of these people on the show in the past. Music royalties, wine. Interesting. I didn't know social media accounts was a marketable entity. So I'm curious how that works.
Yeah, there's it's funny. You can buy social media accounts for far less than you'd think. there's a couple of sites out there. One is called FameSwap. There's a couple of others, but yeah, I mean, you go on FameSwap and you can basically look at people who are looking to sell their accounts. It's fascinating. There's way more supply than demand. There's a lot of junk accounts. There's a lot of a lot of people treat these accounts like a business. They're basically professional flippers, right? So they're looking to use pretty obvious tactics to spin up accounts that they are live for maybe 6 months, and there's ways you can get that follower account number really, really high in that time. It's not like there's no value there, but that's a lot less valuable than the honest someone who's just used to be a micro influencer and is just getting tired of TikTok or tired of Instagram and just tired of the game, and hears about, oh, I can sell my account. That's a lot. That's kind of like perfect for the marketplace. Now, when you're talking about buying social media accounts, you got to think about, there's a couple of different things going on. So there's accounts that are like driven by people personalities, and there's accounts that are driven by themes, right? So what I mean by that is, like, you could have like a micro influencer where that's a lot tougher to sell and buy, because you're basically buying someone's identity, which is really, really weird. You don't see those sites come on too often. What you see a lot more of are, someone has like a dog account where they just post dog memes all day, right? And you think it's like kind of baloney and all that, but some of these accounts have hundreds and hundreds and hundreds, if not millions, of followers, just meme accounts, right? Just reposting other people's content, or coming up with their own content from time to time. But it's not tied to a person, it's tied to an idea or a theme. Those can be good, right? So like the way we think about this is like, I wouldn't do it as a standalone purchase or investment. But if you are, let's say, in the world of, skydiving, I'm just throwing this out there, but let's say you have a skydiving business, right? What you want to do is you want to find a social media account or two that augments your existing social presence in your existing business. And it's a way to, basically, get that content without having to create it. Like, what you're doing is you're basically just buying time. That's it. Like, anybody could go out and spend a ton of time, outsource that time, sure, but it still takes time to build up an account that posts skydiving memes, skydiving videos, skydiving fun facts, and blah blah blah. And after 6 months, you might have 30,000 followers or whatever it is. Half of them don't really, pay attention to what you say or do, but it's a number on a screen. Or you can just buy an existing account, someone who's worked on it for 3 years. It's far cheaper than you'd expect. I mean, we're talking like, it's in the range of 6 to 25 cents per 1,000 users. That's basically like, yeah, about 5 to 25 cents per 1,000 users for good ones too, for good accounts. So that's a pretty small expense and a pretty easy way to boost your own social presence without spending the time to do it. So that's kind of the way I think about it. When you're buying a social media account, you're basically just buying time. But time is the most valuable asset of all. So that's why I think it's, can definitely be a great one.
No, I love the idea of this. I think it's interesting because, I know how long it took to build our company website up. It took me 18 months before Google even recognized me. And then, I was writing it once a week, blog posts, they were good blog posts. I mean, afterwards, once Google recognized them, they got a lot of traffic, but initially it just didn't go anywhere. So yeah, that initial time spent just seems to be sunk cost. It's just, it's there, and
Yeah.
you got to do it, and you don't want to do it. But so I love the idea of this, going out and buying basically a step up. You're buying kind of like a cheat sheet into, into the world that says, oh, this account's already recognized. And even if you 100% churn the users on there because they don't like you, they like the other person, at least you get recognition and you get traction for the existing SEO engine. So to me, that's interesting.
You know what else is great about it is you're buying all of the successes of the previous owner without buying any of the mistakes, right? So like, for example, if you're building a skydiving brand. And, as you're building that brand, you're going to make a lot of mistakes. You're going to do campaigns that don't work, right? You're going to, create initiatives that don't really go anywhere. You're also going to create initiatives that do go somewhere, and you're going to have campaigns that work really, really well. When you go to sell, you're only valuing your business based on the successful numbers, right? Like no one cares about the mistakes you made at that point. So think about like what that means when you're a buyer. You're not just buying time, but you're buying something that's already working, and you're only paying for that. But you're not paying for all the mistakes they made. That's their cost, right? It's kind of a subtle, tangent, but it's something I think about a lot.
But you're also not learning from those mistakes though when you're buying it.
True.
Which is huge, right?
You're not. Huge, absolutely. But you know what? Part of the handoff process is what I used to do all the time is, like a lot of people, they buy a site and they're like, all right, it's mine now, thanks. Like I would spend time with the seller and just make sure you really understand, like, all right, like what's working and what's not. Just give it to me straight. And then they'll just tell you, they'll be like, yeah, look, I tried X, Y, and Z, it didn't work. In fact, if they don't say that, there's something weird going on, right? Because like everyone makes mistakes. Like it's trial and error is the name of the game, right? In everything in life. So, ask them like what's working and what's not, and they'll be proud. They'll be happy to tell you. They love telling you about like things that didn't work, and then more importantly, like things that do. So I think that's definitely like it's a great point. But you have some control as a buyer over that information as well. Yeah.
Cool. Yeah, that's interesting. I'll have to. You and I have to talk about that after. I'm curious about this because there's some things that kind of come into what we do. I do want to kind of touch on, because we've definitely talked about things in the past. We haven't talked about islands or and NFTs, which I think is a whole separate episode. Sneakers, though, sneakers, comics. I have a lot of sports cards. As a kid, I used to collect them. I try to get my boys to collect them, and they're just like, they have no interest. They want to throw them around the car and like tear them up. I'm like, no, we're not doing that. So like,
yeah,
I might be keeping them or selling them, but it's they don't have that appreciation. I think it's a generational thing, because they're into Pokemon and other stuff. So
got it. Yeah. Yeah, there's it's funny though, like it's I thought the same thing, but there's a whole slew of kids coming up that are into it, right? And I think it's definitely driven by like the Gen X like nostalgia, right? A lot of these collectibles are, for sure, right? Like so like I grew up in the 80s and 90s, and that's when a lot of like these video games were big. Comic books go back even further, but sports cards collecting was like huge, right? And then we all kind of got away from it for a while, right? And then like we're all kind of like getting back into it, like in the last 5-10 years. I think nostalgia is a big driver of things here. This is something that a lot of people talk about, like what's causing the boom. I think a lot of it's nostalgia, for sure. I think that it doesn't extend to every market, right? Like there's some markets where we should have nostalgia for it, or we do have nostalgia for it, but there's no real buying and selling happening. All right. So like take like VHS tapes, for example, right? Like we explored this, like, I know it's funny, right?
Betamax.
We explored this like a couple months ago, because there was rumors that like VHS was going to be the new like collectible that people cared about. And I'm like, I just don't see it at all. I mean, it's a fundamentally worse technology. The VHS, that they degrade, they don't hold their value. You put them near a magnet, they get erased. The cardboard sleeves are often like just in terrible condition. It offers nothing better over DVDs or streaming, really. Like it was a giant pain in the butt we all dealt with. And yeah, you're nostalgic for it, but that doesn't mean there's a market for it. On the other hand, there's some old technologies that are definitely like, you look at vinyl records. I mean, that's been around since like the 30s to 50s, right? Vinyl, I don't know if you pay attention to those. I mean, vinyl's super expensive now. It's like not cheap at all. It used to be like you get them for $10 for $1, like back in the 90s. vinyl records are $60, $70 now. I mean, I don't know, people who like aren't into it like don't realize, but oh yeah, they're so valuable. Like they're growing again. You look at like the music industry, and like vinyls, it's about to overtake like CDs in terms of popularity. I mean, it's crazy what's happening. I am a vinyl collector. I happen to love it. I'm just starting my collection. I've probably got about 100 records, but like I'll go to estate sales, and like I'll go to yard sales and stuff, and like no one has them. Everyone's looking for them now. When you do find them, they're like 15 to 20 bucks each. Maybe you can find bargain bin for like under like under 10. Good stuff like Zeppelin, Floyd, Beatles, oh, 50, 60, 70 bucks each. It doesn't even matter the condition. I mean, it's no joke. Like, so I mean, it just depends, you know. But that's what I'm saying. Like every market's different, and you know, it's just fun to really start to understand the stuff.
Yeah, I think my nostalgia with VHS stopped with the blinking clock that you could never get to actually say the right time, and I can never fix that. So that my nostalgia's over with that. I'm good. But
I love it.
but it's funny. It actually my podcast editor here, Steve, he's a wizard. He's got a huge vinyl collection. Every time I talk to him and sitting in the background, I'm like, I'm so jealous. It is enormous.
Oh, it's awesome.
Yeah,
Well, it just, you know, it sounds better. You know, it's completely like, it's not compressed like streaming is, right?
Yeah,
it's the way it's supposed to sound. And so if you're,
yeah, it's real.
you know, it's rich, it's real, and there's something just tangible about, you know, like, you know, putting the record on and just the pops and crackles from the you know, the needle, and just, I don't know, it's, yeah, it definitely has a lot of utility and a lot of value.
Nice, nice. Well, I can appreciate that. What about, I know farmland gets in a little bit more land category, but you know, what are some of the other things like sneakers and actually, I'm curious about the islands too, because I've played around with that on websites and just looked around and been curious about it. But yeah, what do you see
Yeah,
in those areas?
sneakers is fascinating. So it's funny about like sneakers. I don't personally have a love for sneakers. It's not an asset class I'm terribly personally interested in. But man, I feel like I'm starting to be in the minority. Yeah, I mean, there's all sorts of sneaker marketplaces out there now. You know, you don't wear these. I mean, it's like a piece of art. It's basically like an artwork derivative is the way to think about it, right? Like
Yeah.
you hold on to them, you they're more mass produced than artwork is, so there's a little bit of a difference in the dynamics there. But I mean, yeah, like it's, you know, it's about rarity and scarcity. There's all sorts of companies now. There's Goat, there's StockX, there's Rares, there's Pushes, all sneaker marketplaces, you know, that are really starting to do really, really well. You know, I think you know, in terms of like islands and stuff, like that's kind of like a funky, like less practical, quirky kind of category. We've looked at islands. From what we can tell, uh, it's one of the worst investments you can make. Like you
Yeah.
don't invest in an island to make money. You invest in an island to what you do when you're worth $100 million, you know.
Get away from
But like
people.
it's exactly like it's kind of a pain from what we can tell. It's not a money maker, but like the dynamics are fascinating. There are people who have flipped islands for sure. I think the problem there, from what we learned, is like it's basically a land play, except it's worse than a land play because you have to develop the infrastructure yourself. Like you can't, like when you buy land, like farmland or real estate, you can just plug into existing infrastructure, you know, with like water and power and roads. None of that exists on an island. So you have to ship all that in. You have to set it up. You could go off the grid, and some people do that, and that's actually getting really popular, but you don't always have access to sun and water in the same way. You know, I mean, salt water is not water. And so, I mean, there's all sorts of things going on, but basically, you know, if you're not just paying for the island, you're paying for the infrastructure, and you have to set it up and maintain it. No one's going to do that for you. You can't just like ask the city to do that. It's not how it works. So yeah, I mean, it's a giant money suck.
Yeah, then you got to worry about pirates too.
Yeah, you got to protect your island. You need to put up barricades for the pirate ships. Exactly.
I only mentioned it because there was a big thing a while back. Somebody told me, but I thought it was fascinating. But this place called Sealand, I don't know if you've heard of it, but it's this old battlement off of the coast in England that was basically protect. It was an aircraft battery that protect from the Germans way back, and I think it was World War II. And it was interesting because the guy some guy bought it, and it's not really a place. It's just this big metal structure, and he tried to turn it into like its own country. And he was selling like night ships. You could be a knight or like a duke of Sealand. And I was thinking for $50 I might have to do that, just to say, just to have it. I thought it'd be pretty cool just to have, but
Oh,
it was funny because he was trying to make a legitimate island. So he's actually like, he's peppering England with all these kind of requests and trying to get legitimacy and trying to get somebody to come out and like recognize him as a country. And I think what he did was he sold it to some enterprise, and I think it was kind of this black market enterprise, whatever it was. They were doing something shady, and I don't know. I stopped paying attention to it, but to me, it was fascinating because it's this like it's this questionable area of like law and maritime law and just international
wow.
law, and how do you recognize a country? And of course, like I said, you wouldn't live on this thing. Like it was just this metal
Yeah.
structure. But I think somebody went out there and put like servers on it and made it into, but you couldn't do anything with it. That was the whole point. It was just, hey,
Yeah.
this is cool to have, but you can't live there. It's even if it was a real island. I remember seeing an advertisement way back for an island, and it was like this piece of land. It's like cool, but it's like, all right, now what am
Oh,
I gonna do? What if it floods? What if
I
there's a
love it.
storm? Like it
No
just
one thinks about that stuff. Yeah. I'm
yeah.
looking it up right now. This is fascinating. I have to say thank you because what's funny is, we put out a couple of newsletters each week, and, we like to cover exactly this kind of underrated, unknown stories. I'm going to look into this and study up on this. And I'm going to do an issue on this. I'm going to give credit to you, and I do, because thank you for bringing this to my attention. This is exactly the kind of thing that we love to talk about and explore. And you're right, like it rubs up against so many other important, day-to-day concepts and stuff like sovereignty, what constitutes a country, how do territorial waters work. I mean, it's all sorts of ownership questions, and yeah, I cannot wait to explore this. So thank you very much for bringing it to my attention.
You heard it here on the first time money tree. But yeah, stuff like that's fun, right? You get to learn about all these little nuances, and it's this useless information that used to fill my dad's head, and he always used to talk about all this useless stuff. So every once in a while, I find one. I'm like, yes, I have something new.
Well, it's
Um,
funny because, like you said, useless information, and I'm not afraid to look at the useless stuff for sure.
yeah,
I think, I mean, we definitely center our research and our writing around useful, practical opportunities and real investments. But every now and then, you're right, you just want to mix it up with something that no one's going to buy. It's just like you want to understand the thought process of other people that bought, and that's exactly what we do. So yeah,
yeah.
thanks again.
You could be the life of the party, right? You could talk
That's
about
it.
some cool stuff. What about things like, I'm just looking at your website here. What about things like old books or racehorses? To me, it seems like these would be niches that are probably outside of the realm of what you guys do. Like racehorses, kind of this small circuit of good old boys that trade within each other. And if you're not in the club, you're not in the club, kind of thing. And I imagine old books are kind of the same thing. You've got a few experts that trade in these things, but otherwise you're kind of on the outside. So how do you kind of market that? How do you get involved with that?
So with racehorses, there's a couple things going on. Racehorses actually is huge here in Australia. Horse racing, I should say. There's all sorts of like syndicates and betting circles, and it's just a big part of the culture here in New Zealand. I think that there's a lot of fractional ownership platforms coming up now. So Commonwealth is one that we've worked with in the past. It's more akin to betting than investing, so we don't really cover it too often. But we've written about it from time to time. Books, on the other hand, that's definitely an investable asset class. It's not as niche as you think. It's much larger. Um, there's a whole slew of quality works that are in great shape that go back sometimes hundreds of years. Talking about old Isaac Newton works, right? This museum worthy stuff. That's what you talk about when you talk about rare books, right? But even like original, printings of like Harry Potter that are in like pristine condition. I'm talking like, original printings, the one that had the typo on page 6 that immediately got,
Yeah.
they never printed it again, and that kind of stuff. Like that definitely has value with collectors. And yeah, no, books are, I wouldn't call them that niche. It's not the most popular, but there's a lot of folks that are into rare books for sure. Something like niche would be like maps, right? Like there's a whole world of folks that collect maps, and like maps are fascinating. That was a really interesting one to explore, because they're wrong. I mean, you look at old maps and they're just flat out false information, because people didn't know what was on the other side of the world or the country or whatever it is. And so they just made things up. And so you look at these old maps and it's just like, wait, that's where California's supposed to be. It's like there's just nothing there. And like that means something. I mean, that's like museum worthy in many ways if it's in good shape. And so there's all sorts of fun stuff like that. I think some of the most fun we've had was we talked to the guy who has the world's largest collection of Hot Wheels, or actually, sorry, the most valuable collection of Hot Wheels.
Hmm.
He basically created the market for Hot Wheels. The guy's story is fascinating. His name is Bruce Pascal, and try to get him on the show if you can too. He's a trip, but like he basically he went and he like found a list of everyone who worked at Mattel, like in the old days, and just went through the phone book and like found these people. And that's how he got his supply. He's like, I'm starting to
Wow.
collect these, like, do you have any? And over the years now he's got like a whole museum. Basically it looks like just I mean, it's like he could charge admission to his museum of Hot Wheels. And now there's other people that are into it, and then there's like super rare ones that like there's only 3 in existence and he has 2 of them and no one knows what the third one is. It's just fascinating dynamics, man. Really, really fascinating stuff. Legos is another one that we
Yeah.
thought was niche, but like there's a lot of Lego collectors now. It's starting like there's all sorts of adults that are into it too. And I can see myself getting into it. Actually, there's some pretty cool Lego sets out there. They just came out with the Office, right? Like the Lego version of the Office, right? So got like Michael and Dwight and all the characters, and it's just fun.
It's
So
funny
yeah, I mean,
growing up.
it really runs the gamut. Yeah, go
Yeah,
ahead.
growing up with Lego, it's interesting. Growing up with Legos, that was, I don't know if that's when they came out, but certainly it was like cool then, and then it's cooled off for a period of time. I did some research on this a few years back because my kids were getting into Legos, and I was like, oh, cool, like, what's out there, and of course, they're all really expensive, and now I almost feel like they're they're totally raking people over the coals with what they charge for
Yeah.
what they give you.
Oh yeah.
That happened maybe
Oh
three,
yeah.
4 years ago, and I stopped buying them. Like this is like we're that's no good. But the old stuff was
Yeah.
cool. Like my boys still have them, and they're still built, and they're just really cool. It's like a display item for them.
Well,
They keep
the
them in their
best thing
room.
is the old sets are still completely extensible with the new ones. I mean, they haven't
Yeah,
changed the dimensions of the pieces. So you can. I mean, there's some things that don't quite work, but for the most part, you can just combine old with new. And yeah, I totally hear you. Like Lego Corporation's fascinating. They've um I mean, they were almost bankrupt for a while. Like there's a
yeah,
whole story, you probably know about it, but
yep.
they saved themselves. They sold off Legoland basically to save themselves. And now they've got the equation working. Like, I mean, you're right, the new sets are 3 times as expensive and you get like half as many pieces, if that. I mean, they've definitely tweaked the numbers, so to speak. But hey, they're still alive, they're still a great brand, people love them. Hats off.
Yeah, yeah. I did, like I said, I did the research on the company afterwards, and it was an interesting company. If you haven't, for the listeners, if you haven't, probably everyone listening to this probably has had Legos at one point or time or another in their youth. But yeah, fascinating story about what they went through, and I think it's still private, so you don't hear all the stuff, but you
Yeah.
definitely hear, a lot of it, and I love the transformation, except for the price. I think that's a little too much. Yeah, so I know we kind of went through a lot here, and I'm just kind of looking through this. One more that kind of popped up on the website: billboards. What's that all about?
Yeah, billboards is, there's a whole world of billboard development, management, buying and selling that 99% of people just don't know about or care about or ever hear about. But yeah, it's pretty fascinating. I mean, it's funny. I was so inspired after writing that billboards issue and learning about the markets and listening to billboard podcasts for like a week straight. I was convinced I wanted to go find some boards, in rural Australia and like just start, putting them to work. And but it's like with anything else, like it's active investment. It's not really passive. Like I think there's a passivity to it once you get going, but it's not the kind of thing that you can just set and forget it. You got to really hustle to find land, to get the permits and the approvals, to sell, right? Once you get a good operation going, it's like any other small business. And you can actually, I mean, there's people making millions of dollars out in like, Oklahoma and Arkansas, and just where there's just miles of nothing and no laws against billboards and just highways that are just every half mile you see another huge board. And so I was like, listen to these podcasts of these people talking about billboard dynamics, and they're like, yeah, I own 6,000 boards between here, Kansas and Missouri, and it's like, I mean, why? It's just crazy markets that no one would think of. But I think what's fascinating about billboards is like there's still so much money to be made, and like something that is pretty ancient technology. Like we're not talking about digitized stuff here. We're just talking about like regular like rural route like boards, and you can definitely make money from it for sure. I I don't particularly love it as a, I'm not recommending we get into it or anyone get into it, but I'll tell you, like, it's just fascinating to learn about these markets and to teach people about them. And I think, with each new market you learn, like the whole world starts to make a little bit more sense to you, right? Because you can start making connections between markets that like other people like couldn't really make. And I think it was through billboards research that we realized that how lucrative radio advertising can be, just through like just tangents of thought and research. And that's something that directly affects our business, right? That's something that we actively do, right? So I think that it's so helpful to really understand how these markets operate, who the players are, what the dynamics are. It helps you in all sorts of different ways in life. I really believe that.
Yeah. Yeah, no, I agree. I think it's an interesting asset. I think they got a lot of them got bought up by, I forget, one of the media companies many years back in the cities. I can't remember off the top of my
Clear
head.
Channel.
Clear Channel, yeah. They bought
Yeah.
up a bunch of them, and I was like, it must be a good business. And come to
Yeah.
find out, so are old theaters. I know a few of them bought up these
Mm,
old, really nice theaters that no one uses, but they own them. So if they ever, so
mm,
A, probably so you can have an event, you could have it there, and B, so they can't have any competition, right? You can't go rent some mid-sized theater because they own those too. So to me, the media business is fascinating. But um,
mm.
well, Stefan, this has been great. I really appreciate you coming on and sharing a lot of your wisdom with us. Any kind of final thoughts from you, and where can people find more about you?
Yeah, just check us out at alts.co. So alts.co, alts.co. If you like what we're writing about and what we're getting into, sign up for the newsletters and yeah, take it from there. We hope you enjoy what you get.
Great. Well, thanks for coming on, Stefan. We'll definitely have you back on the future, because I think we talk about alternatives nonstop on the show. So I think there's probably a lot of new ones that roll out every once in a while that you could get some helpful wisdom for our audience. So thanks again for joining us.
Thank you for having me.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist, because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room, as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right. Well, that was a great interview with Stefan. I really appreciated him joining the show. As you all know, I love alternative investments. So to me, this was a fun episode. We got to hit on so many of my favorites here and then some, and learned quite a bit about some other alternates that I wasn't even thinking about. So now we're going to get into the panel portion of the show. So this week we have our very own Barb Friedberg. Hey, Barb.
Hi, happy to be here, Kirk. Hi, Doug.
And also we have our very own Doug Heagren. Hey, Doug.
Hey, Kirk. Hey, Barb. How you doing? Thanks for having me today.
Good. Well, let's just dive right in. So, Barb, what were some of your takeaways from the episode?
Hearing about all the different asset classes, I feel richer already. My husband is a fabulous collector of pop art collectibles and icons, Funko, baseball cards, vinyl, you name it. We've probably got old books too. The only thing we don't have is a billboard. So it was very exciting personally to think I'm sitting on a treasure trove of collectibles, but how to monetize these, how to invest in them, how to trade them, that will make for a good conversation today. So I'm excited to dig in and talk about, how viable is this as an asset class?
Yes, I think that's a follow-up question for after we talk to Doug about is it investable, is it hobby, or is it junk? I guess we'll find out soon. So Doug, what are your thoughts from the interview?
Well, I think he hit on a couple different things, especially around, and the one thing that stood out is nostalgia, right? I mean, look at all the movies coming out from the Gen X, generation that are now being reproduced. I think there's a really emotional connection that people have right now to a lot of the stuff that he was talking about, and that's created an incredible market for a lot of these things. My question has a lot to do, like Barb said, how long, how does it get monetized? How do you invest in it? How long will these things last? Is it a real tangible market, or is it a fad? When we look at these things, what I still hear in there, it's a lot about arbitrage. And arbitrage is something that can be very, very complex. You're basically hoping, I hope what I have is going to be more valuable someday. And if it's not, you're stuck with, as Kirk said, maybe a lot of junk in the cabinet. And I think that he talked about a lot of different things. There's some things that, that really fall into some more of the traditional ways that we think of alternatives that Kirk talked about even in that interview. And then what he's calling alternatives, that when you start thinking about alternatives as part of an asset class, what is the purpose of those alternatives? And do these fit the mark? I think that's the big question.
Yeah. All right. Well, let's just dive right in. So Barb, there's a line here, obviously, between investing, hobby, junk, or maybe even kind of monetizing your hobbies. So there's a lot of shades of gray here. So how would you look at this? Like, with either with your husband's stuff or just in general?
Well, that is a good question. I'm going to hone in on one aspect of what he was talking about in terms of alternatives, because I happen to be pretty well versed in the website idea of people monetizing a website, buying and selling websites, buying and selling domain names. This can be a full-time job. Monetizing a website, when he was talking about that, and I've had I have two websites that I run myself, have created from scratch and give a very nice cash flow. It's an investment because at some point I could sell either or both of them, but running them is literally a full-time job. And the amount of return you get, unless you happen to hit on the absolute best formula, is really relatively low for the amount of time that you put in. So I'm going to say that you have to look at each of these opportunities. Passive investing, whether it be in comic books, whether it be in trading cards, whether it be in websites, not so passive. Almost every endeavor, except maybe the billboards. And I think of the billboards, well, you've got to get the permits, you've got to find the clients, you've got to advertise. Billboards are similar to rental real estate, except without a lot of the maintenance, but maybe it has maintenance too, because you've got to get the tenants. And so I cringe when people talk about passive investing. I've dabbled in, you name it, you know, from real estate stuff. I don't dabble in stocks, bonds, real estate, but, you know, other buying and selling of assets. And for the life of me, I don't see much passivity in almost anything.
Yeah, you know, it's funny. There was a movie, I forget what it's called. It was about the three billboards outside of Ebbing, Missouri, I think, or something like that.
Saw it. Yeah, I saw it.
Yeah, and they actually go into some of that, right? There's like, how do you rent them? Like, how do you find new people? Like, to me, that was just fascinating seeing that. I mean, it was an interesting movie to begin with, but yeah, I think what you bring up, Barb, is actually, I think, really important point is, where's the line between passive and active investing, or in your case, maybe even a labor of love, right? Like you're saying that, you know, for the time that you put in, it's maybe not even worth it, but I'm sure you fully enjoy it for many reasons, right?
Absolutely. And, you know, that really delves in, Kirk and Doug, I think, to the hobby crossover between a hobby that's making money that's actually turning into a business.
Yeah. So I think, you know, so Doug, getting to you, I mean, you know, what are kind of your thoughts? Because I know you've kind of looked at these, but alternative investments have there's some good and bad parts, right? They're interesting, but you know, at some point you got to draw the line between, you know, the labor of love or the hobby, something you enjoy, versus you investing for money. So kind of what's your take on that?
Yeah, well, the take on that here is one of my first things I thought when I listened to this, and goes back because he started with talking about websites, is we used to hear about, you know, domain squatting, right? You sit on the domain and you wait for a buyer, right? And sometimes that can take days, and sometimes that can take years, and sometimes nobody's ever going to come and pay your price. What we're going back to is it's arbitrage, right? And arbitrage is essentially, what can I get it for and who's willing to pay more? And there is inevitably, in any level of arbitrage, there's a cap on that, okay? Now, that cap may grow because of inflation and other things over time, but eventually there's just going to become a limit in which, you know, where people are willing to pay for the value of something, especially when you take a look at something that has, let's go back to the fad type of thing that has come and gone in terms of an emotional commitment. You know, he talks about shoes. One of my favorite shows the last couple of years was a show called Blackish, and the protagonist in the show he always talked about his shoe collection, right? Now, there's one type of shoe that's truly the one that everybody wants. It's Air Jordans. And there are other shoes that are out there, but Air Jordan is the king of shoes. Now, I just thought, okay, it's interesting. He likes to collect shoes, until I went to an event last year and started talking to a gentleman that is deeply involved in the shoe arbitrage game. There's this huge underground world of shoe trading. I'm like, what? Because that was never a big thing for me. And now you're seeing things like artwork and, the trading of those things. And these are great. But here's the thing it takes to do all this. It takes money. Right? You have to have it's supply and demand. You have to have a demand, and the demand for these types of products happens when there's either an extreme emotional commitment first, but the second thing that has to happen is the willingness to actually put up good money for this, right? And I think it's a sign of the times. We know this. We've talked about this many times, Kirk. What is the last 15 years is just a free-for-all of cash flow, right? Low interest rates. Everybody's got money. You look around, it feels like everybody in the world is a 1%er, right? They're talking the game, they're playing it. So, you look at these things and say, well, where are they going to put their extra money? And they go out and they buy shoes, and they go out and invest in art, and they go out and invest in watches, and they go out and invest in islands, and go out and invest in these things. Listen, if the biggest thing about investing, and I'm not saying it's everything, but we talked about this before, it pays to get paid for your risk, right? And if you're emotionally connected to something, that doesn't always make you a great investor, right? So there's a lot of things in there I think play some great alternatives. What is the main purpose of alternatives? They typically are an area where you can hopefully park your cash flow and collect income off of, whether it's active or passive, and know that there's going to be hopefully some store or growth of value. In a lot of things he talked about, I mean, my dad collected trading cards. He had Mickey Mantles. He had Hank Aaron's. I don't have those, unfortunately. Why? Because back then they threw them in the spokes of their bike, and they ran along thinking they had a motorcycle, and they beat the cards up. And eventually he moved out, and grandma threw them all away. Okay. I collected cards. It was big in the 80s. And then all of a sudden it wasn't. They were worthless. Now all of a sudden they're huge again because of this nostalgia. How long is that going to last? Because when it doesn't, it could be 20 years of holding on to cards. I got cabinet full of laser discs. I know people that make money on laser discs. Maybe they're coming back. I've got records. For a while there, I got an original White Album for $60. I'm not getting that now. But that's the other thing about passive. If you're going to do this arbitrage, you need to know when to get it. You also need to know when to get rid of it. Okay. And it takes a lot of work to get rid of it. Why do I have these laser discs? Because I thought, I'll buy them and then I'll sell them. Heck, when the Wii came out, there was, the Wii Fit. Everybody wanted it. So I bought a couple, think I'd sell it. But then you got to go to eBay. You got to price it. You got to package it. You got to deal with it. I'm like, and guess what I still am sitting on? 2 Wii Fit boards that are worthless now. Okay. There's a lot of work in this. I love what he talked about billboards. Billboards are different. Billboards are like real estate. You get the right corner, everybody wants it because everybody sees it, but it's cash flowing $10,000, $20,000 a month, right? There's a guy up in Minneapolis, Chris Lindahl Real Estate. He's famous for his memes because he put his billboards up everywhere. Come buy from me, right? It's advertised. It's a way to advertise. But again, a lot of these things here, they don't pay you to hold on to them. And if you don't strike while that fire's hot, or where that fire is hot, or that iron's hot, the saying goes, all of a sudden you are sitting on something you were emotionally connected to that you thought was going to have an endless return, and you've missed the mark. And now you just have, cabinets full of stuff, which, by the way, leads to another great place to maybe put, which is storage units. But that's a topic for a different day.
So it sounds like the way you're describing some of these alternatives, Doug, is much the way that people treat their stocks, where they get emotionally attached to a stock and they never want to sell it because, it's going to go higher, or I love the company, or whatever the reason is, right? So there's really no difference between the traditional and alternatives in that way.
I think it makes some great argument in that, again, and I think that kind of describes potentially your growth stocks or your speculative stocks versus maybe your dividend stocks, that at least you're getting something for it. I think it plays into also the world of these new technologies and investment opportunities like non-fungible tokens known as NFTs or crypto. Again, hey, from an arbitrage standpoint, if you can own Bitcoin and it can go to 100,000, congratulations, you've made your money. You buy it at 60 and it's at 23,000 right now. You're waiting a while, right? There's no value to holding it. There's no value to holding an NFT, which for me, it's like, okay, you created a digital image. I can go clip that off the internet tomorrow. Where's your value? How do you control that? All of a sudden you see these stories of Justin Timberlake's or whoever spending $5-10 million to buy some crying frog or whatever it is. It's like, where's the return on that? You're hoping that everybody's just going to go out and license this thing from you. Maybe that will happen. But you, again, just like anything, you have to be prepared for a tremendous amount of risk. You also have to be prepared to be patient for when there could be a return, if there's a return on it. I wouldn't spend your everyday cash trying to hit a home run, right? Your first investment should be there. But I also think it comes back to what do I believe is a good alternative? A good alternative investment is something that has no correlation to the market at hand, okay? It means it could be strong with the market at hand. It could be poor with the market at hand. There's no pattern. Here's where there is correlation in all of these things. A lot of friggin' money that everybody has to throw around. And guess what? As we've talked about, we've spent 10, 15 years of low interest rates giving access to capital for every startup, for every idea, for every technology, for everything. People had lots of money that they could just throw anywhere. We're starting to go into a paradigm shift. You've mentioned it, Kirk. And if that tightens up, where's the demand going to be placed? Is it going to continue for these types of things that may be completely correlated to the bull market we've had?
Yeah, no, I think it's a great point. I think it's a great point, Doug. I mean, I think what you're hitting on is there's a lot of similarities between traditional and alternatives in that way. And I think any sort of capital appreciation relies on the greater fool theory, whether it's stocks or whether it's alternatives, versus cash flow, which is a different kind of investing. So Barb, I want to kind of tilt this over to you, because I think what Doug was talking about is really fascinating, which is correlation between alts and traditional, and the access to capital, which of course we've had a good 40-year bull run of that, especially the last 10 to 20 years. So what are your thoughts on this? I mean, you like passive investing, and obviously that relies on a good amount of modern portfolio theory to find low correlation assets. So what's your kind of take on that?
First of all, I have a problem really comparing something like crypto or trading cards or some of these quote unquote alternative assets with investing in stocks and bonds, particularly comparing something like NFTs. A stock is a portion of ownership in a company. That is a real tangible thing. It's also liquid. You can buy and sell it 24 hours a day. You know what the price is at any one time. You also can research it. Clearly, there's earnings manipulation, et cetera, but in general, publicly traded companies are required by law to include their financial status. So there's a lot more known about the public investment markets than there is about the alternatives. There's the liquidity, and in many cases, there is cash flow. So you're getting stock dividends. When you invest in bonds, you always get cash flow. Now, the similarities are price volatility, because every asset that you invest in, because of the risk that you're taking by investing in it, the price you pay is that for this hopefully elevated return is that the price is going to go up and down. That's where diversification comes in. So in a typical investment portfolio, you diversify with international, US, small cap, large cap stocks, bonds, corporates, treasury bonds. And so, yeah, clearly, Doug, the correlation has been very close recently. It isn't always. And that's where theoretically diversification, and I do believe over the long run, diversification is going to work. So I think you've got more of a certainty with the public markets because there's much greater information and it's much easier to trade. And in many, many cases, you have a cash flow built in. That doesn't mean I don't like alternatives, but as Doug was kind of hinting at, you don't want to put your first dollar into alternatives. That's for what I consider the 5 to 10% of your portfolio that you have in what's called a speculative bundle, where this capital is much more speculative. And there is very real type of emotion in many of the alternative assets. You know, the baseball cards, the vinyl, and the trends up and down, really violent. My daughter, who is an adult now, had an amazing Beanie Baby collection. And she had a beautiful book that valued those Beanie Babies. At the height of this popularity in the 90s, her collection was probably worth $5,000. Flash forward today, the Princess Diana Beanie Baby, not sure it's going to live up to its 1990 valuation. So takeaway here is be really clear. Whatever you invest in, know the potential risk, know the potential rewards, understand if this is in fact an investment, a hobby, a side business. What do you expect to get out of it? One more example, and then I will shut up. We bought a piece of Dr. Seuss original art because we loved it and because it was a really good price. Kirk, you know, I tend to look for value. It was an amazing price. We love it. It's hanging on our wall. We didn't buy it for appreciation. It has appreciated. Great. So the piece of art hanging on our wall has appreciated. It's nice to know. It doesn't matter. I'm not selling it. My daughter loves it. She'll get it when I die. So be clear. I absolutely enjoyed this interview. I think it's really interesting. It's not easy money, and really very little is.
Yeah, I think there's a few points I want to pull out here. One is really a lot of the differences between traditional investments and alternatives. You know, there's a lot of similarities. One of the similarities is, or say there's definitely some differences. I want to hit on those first. The differences between traditional and alts. Traditional tend to be more liquid, and there's some advantages to that, right? You can buy and sell anytime you want, you know, as long as the markets are open. The downside to that is they're liquid, which means the price is usually the price, right? There's not a lot of discrepancy or arbitrage opportunities in a liquid market. Where a non-liquid market, if you need to sell, well, you know, as Barb said, the Beanie Baby collection now is gonna be a lot harder to sell than it was, you know, a few decades ago. And I think that's good and bad, right? The good part is, hey, if you want to buy a value, maybe now's the time to buy it, right? When no one, you know, when people have extra and you're looking for good values. Whereas if you're buying at the height of the Beanie Baby bubble, let's say that 5 times fast. If you're buying at the height of the bubble, then you're probably going to pay a lot more than you should, right? So I think you have to understand what you're doing with alts, and sometimes it's understanding when you can take advantage of the liquidity. I'll give you a perfect example. Back in 2008, we all know what happened with real estate. You know, a lot of areas real estate went down 70, 80%. And there were a lot of non-traded REITs. And I remember going through them at the time because, you know, we had some new clients who were like, oh, I've got this random non-traded REIT. What should I do with it? So I went to, there are a few different marketplaces, not many at the time, but there were a few. And you could go and, you know, if you wanted to liquidate the REIT and you went to the REIT and you're like, oh, I want to liquidate this. They're like, sorry, I need somebody to buy it. Like they're not making a market. So basically you couldn't sell it. And some people needed money, so they couldn't sell, which is a problem. But there were marketplaces who would buy them for 20 cents on the dollar. And, you know, I was thinking about it. I'm like, Like, that's really interesting. Some of these things are actually worth a lot more than that. They're just illiquid. They're probably worth 60, 70 cents in the dollar. But if you could buy it for 20 cents in the dollar, just wait till the illiquidity dries up, or at least kind of becomes more liquid. And then all of a sudden, now you've just made 3 times your money. And you've taken very little risk on an asset that actually is worth something. It just temporarily, nobody wanted it. And I think you have to understand that piece of the alternatives. People like alternatives because they're scared of the stock market, or they don't trust it, or they don't think that it's priced right, or whatever it is. There's a lot of good reasons, and they're valid reasons. But at the end of the day, there's always a give and take. There's no perfect solution. With alternatives, there comes some pros and some cons. With traditional, there are pros and cons. And if you understand how to work those pros and cons in your favor, now all of a sudden, now it becomes really attractive. And I think that's the piece that I think a lot of people miss. They get baited into the idea of alternatives being great because they're different. They're different. And as long as you understand that difference, they can really work in your favor. So I'm a big fan of alts, as everybody knows, but I think you really need to understand the benefits of them to really be able to take advantage of them. So I want to, in the interest of time, I'm going to wrap it up here. So Barb, final thoughts from you.
Be really cautious when people talk about passive investing. Even a passive index fund investment portfolio requires you to rebalance periodically and attend to your investments. So there's no such thing as a free lunch. I'm Barbara Friedberg. You can find me at Barbara Friedberg Personal Finance, Robo Advisor Pros, and on YouTube. Bye.
Thanks for coming on, Barb. And Doug, final thoughts from you.
Yeah, I want to say, I think the greatest winner of arbitrage of all time was Ty Warner. And Ty Warner was the founder of Ty company that made the Beanie Babies. And he sold it off at the peak of it, right before a crash. And now he's diversified his portfolio into, he owns the Four Seasons in New York. He owns, many, many other entities. And again, he's someone who realized, look, I'm not going to put all my eggs in one basket. I was able to take advantage of this, and now he diversifies. I think alternatives are a great part of a portfolio, especially if you can find something that is non-correlated. The one thing I want to add on the last part of this, you talked about the REIT thing, just really quickly. I had a bunch of people that I knew were starting to get offers on their REITs after 2008, being offered at $3, $4, $5 a share for the REITs that they had paid $10 a share. And I told a lot of them, I said, if they're offering you $3 to $4, $5 a share, it means it's worth more than that, because they're not going to offer you something to make money. These REITs were still paying 6%, even though the valuation was down. And so if they could buy it at $4 a share and now collect all that income until fruition, again, understanding the value. And again, they knew they were going to get money off of this, which is why I think alternatives, you have to hopefully get something that's going to have a proven store of value. I think, there is room for speculation in portfolio, but don't make it a huge portion of that. You have to be prepared for fads and things that are going to come and go, especially when it's tied to a lot of nostalgia and free money. The last thing I'm going to say on this is physical versus digital. And I think this is a big thing that's changing. George Jetson was born a week ago, I believe. So things could be changing for good. But when you're looking at investing in digital art or digital assets, or, these shares of assets, it's very different than having that piece of art that is sitting on your wall, okay, that's timeless, that was painted by a Michelangelo or a Picasso or a Renoir, okay? There is something about that that's very rare. When lots of people are buying in pieces of a digital product, the rarity starts to go away. But the problem with the real tangible products is there's a limited amount of storage. Okay. You've got to figure out how to deal with these things. And, and how many shoes can you collect? Now you got to go get warehouse space, right? How many laser discs can you have? You got a wife that's unhappy that their cabinets are filled with them. Okay. So there is a cost to acquire these type of things. Yes, digital may be easier, but that also may, again, indicate where the potential for value is going to be. So be careful about, these alternatives, understand what you're getting into. Again, a piece of the puzzle I think is always great, but be prepared to not put all your eggs in one basket like Ty Warner did as soon as he got the chance to get out. Okay. So my name's Douglas Heagren. I'm with Mergent Group, also Pro College Planners. Pro College Planners, you can check us out at procollegeplanners.com. No matter who you are, you're probably overpaying for college. There is discounts that are out there. Most people don't know how to get them. Most people don't do the work to get them. And listen, if you think that you make too much money to get discounts on college, these are the people that really need the help, because there's plenty of money out there. And it's not just the discounts you get on college, but how you pay. Check us out, procollegeplanners.com. Find out more information and give us, if you've got kids that are, entering high school all the way up through senior year right now, it's not too late. Let's have a conversation, figure out how you can get the money and make college have a return on investment.
Great. Thanks for coming on, Doug. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.